I'm going to ask you to give me the next 15 minutes, not because I'm going to pitch you something, but because what I'm about to show you will fundamentally change how you think about what your capital can actually do. Now, if you have money sitting in a brokerage account, in a portfolio that's meant to grow over time, in real estate, maybe in bonds, or in anything that promises stability and delivers mediocrity, this briefing is for you. My name is Alex, and I run Vincere Trading. Vincere is Latin for to win, and that's not branding, that's a standard. Here's what this briefing covers. I'm going to show you 6 years of third-party verified algorithmic trading performance, including every losing month, and let you decide if it changes your perspective on where your capital belongs. No hype, no promises I can't back up, just pure data. And if at any point in the next 15 minutes you decide this isn't for you, no problem, but I'd wager you won't. So with that being said, let's get right into it. So let me start with the proof, because everything else I say means nothing without it. Since January 2020, Vincere's algorithmic suite has produced the following third-party verified results. Average monthly return, 4.15%. Average annualized return, approximately 50%. Best single month, just shy of 20%. And worst single month drawdown, approximately 8%. Percentage of all those months that have been traded since launch, 81% of them have been profitable. So let's put those numbers into context. The S&P 500, the benchmark everyone loves to measure against, returned approximately 112% over that same 6-year period. That's considered strong performance. Most managed funds can't beat it. Now, starting with 110,000 since January 2020, compounded, the Vincere algorithm suite has produced over 1,600%. The account value grew to nearly 1.9 million, 14 to 1. That's how much we outperform the S&P 500 on a compounded basis. But here's a number that matters most to sophisticated investors, the Sharpe ratio. The Sharpe ratio measures return relative to risk. Vincere's algorithm suite generates alpha that exceeds even top-tier funds, with a risk-adjusted profile that reflects systematic, disciplined capital management, not a leveraged bet. And our maximum drawdown in 6 years, approximately 8% negative. Now, during that same period, the S&P had dropped over 34% in one single month. Hedge funds gated their investors, real estate froze, private credit could not even be touched. Our algorithms kept trading. Some of the best months we had came from those periods of great market stress, because we're market neutral by design. These numbers are not from a backtest. They are not from a spreadsheet we built. Every trade is independently verified by Absolute Performance Verification, a US-based auditing firm with over 20 years of experience, headquartered in Seattle and Charleston, South Carolina. Our performance was audited by an accredited investment fiduciary analyst who sits on the CFA's Institute's Investment Performance Committee. And he personally audited billion-dollar investment funds across the US and worldwide. The audit was conducted using global investment performance standards established by Chartered Financial Analysts Institute, the same institutional standards the world's largest funds are held to. Here's why that matters. Most Forex algorithm providers use the same single auditing firm, a website with no face, no credentials, and no accountability. We looked at that and said no. Absolute Performance Verification is a firm with 20 years of history, named professionals, real institutional credibility, and a reputation they've spent 2 decades building. That's who we chose to verify our numbers, because our commitment to integrity demanded nothing less. You can request the full audit documentation at any time before or after you speak with our team. We have nothing to hide because there is nothing to hide. We're as truthful and as transparent as it gets, and we live by the numbers. Here's what we're going to be covering in this briefing. I'm going to explain why algorithmic trading is the single most underutilized wealth building tool available to non-institutional investors, and why that gap is closing fast. I'm going to show you exactly how Vincere's system works, what it trades, how risk is managed, and what the realistic return expectations can be across different capital levels. I'm going to compare this directly to the S&P 500, real estate, private credit, bonds, and hedge funds, and show you the risk-adjusted math on each. And then I'm going to tell you exactly who this is for, what working with us looks like, and how to take these next steps if it makes sense to you. No pressure, no artificial urgency, just a clear picture of what's available and who it's built for. So first, allow me to tell you who I am and why I'm the person in front of this camera. Before Vincere, I personally built an Amazon private label business that scaled to about 5 million in annual revenue. I was proud of that, put my heart and soul into it. But then Amazon themselves decided to compete directly against me. Same products, but their algorithm, their shelf space, their advertising spots. Basically, my business took a very big turn quickly and it was gone. Now that experience taught me that you can build something that performs and still have it destroyed by forces outside of your control. Shipping rates, currency tariffs, direct competition from the founder of the Amazon business. So a lot of stuff out of the control. But I needed a game where my results were purely mine, where success came from edge, not from managing variables I could never control. That's what brought me to trading. I went looking for algorithmic solutions and found nearly every major provider in the space. I tested them, I trusted them, I lost hundreds of thousands of dollars in the process. Not because markets were bad, but because the systems were dishonest, poorly built, and simply not real. So I started building my own. I reached out and started to source work from high-level former quant developers. We worked on building the algos and fine-tuned them over time. Then I started to run them on my own accounts through some of the most volatile market conditions in modern history. COVID, the 2022 rate hike cycle, inflation spikes, but the results held. I started to help family and friends, and the results replicated. And that's when we knew we had to bring this to the larger public. Now behind me, I have a team that includes real quantitative analysts and professional developers. This is not a one-person operation, but the origin, all the reason this exists at all, is personal. Because I know what it feels like to be the person who loses real money chasing a system that someone sold with confidence and delivered nothing. Vincere was built so that never has to happen to anyone we work with. Let's talk about the opportunity at hand, because most people don't fully understand what they're truly missing. The institutions figured this out long ago. Over 80% of all trading volume in US equity markets today is driven by algorithms. The hedge funds generating the highest risk-adjusted returns, Renaissance Technologies, Two Sigma, Citadel, they are all almost entirely algorithmic. The best performing capital in the world doesn't rely on humans sitting at a screen making discretionary decisions. So why do almost no individual investors have algorithmic exposure? Well, two reasons: access and awareness. Until very recently, deploying institutional-grade algorithmic strategies required tens of millions of dollars in minimum capital, a quant team, and a compliance infrastructure most individuals can't build. The retail version of algorithmic trading that existed, signal groups, bots, copy trading, Discord servers, was almost universally garbage. And the few good operators that existed weren't accessible to anyone outside of their network. That's the gap Vincere was built to fill. Here's the core value proposition of what we're doing here at Vincere Trading. Instead of making one concentrated bet on the direction of the market, you are a diversified suite of 11 uncorrelated algorithms, each with its own logic, its own time frame, its own market conditions it was designed for. When one is in drawdown, the others are usually producing. The portfolio effect at the strategy level is what creates the consistency. And because our market strategies are neutral, they don't require the market to go up only to make money. They continue to perform when traditional portfolios are suffering. Some of our best single months happen during equity market crashes. Active investing returns without the active trading. Zero management fees, zero performance fees, full liquidity, capital stays in your account under your control at all times. This is what the institutional world always had. This is now available to you. Why is now the right time for this? Well, several forces are converging that make this moment uniquely important for sophisticated investors. First, the traditional investment landscape is deteriorating in real terms. Interest rates, though elevated, are expected to trend lower. Bond yields are compressing. Real estate is illiquid and increasingly correlated with macroeconomic volatility. The 60-40 portfolio that was supposed to protect you lost money in both components in 2022, simultaneously for the first time in decades. Second, the democratization of algorithmic infrastructure is happening right now. Platforms like NinjaTrader, institutional-grade data feeds, and cloud-based execution have made it possible to operate strategies at a level that would have required a full quant desk 10 years ago. The technology barrier is gone. Third, algorithmic trading as a category is growing exponentially. As more institutional capital moves into systematic strategies, the edges for well-built, retail-level systems that operate in specific niches become more durable, not less. The market rewards precision and consistency. Investors who move into this space in the next 24 months will look back and recognize this as the window. The ones who wait for it to be obvious will be paying to get in at a premium. Let me compare this directly to where most sophisticated investors currently put their money. The S&P 500, the benchmark, 112% over 6 years. No fees beyond an ETF expense ratio, but maximum drawdown of 34% in a single month, fully correlated to market sentiment, geopolitical events, and macro cycles. You are entirely dependent on the market going up over the long term. Now Vincere, over 1,600% compounded over that same period. Maximum monthly drawdown of approximately 8%, market neutral, positive performance in bull and bear conditions alike. Real estate, historically strong returns but illiquid. You cannot access your capital on short notice without selling an asset, paying commissions, and waiting months for it to close. Heavily leveraged by nature, subject to interest rate risk, maintenance costs, tenant risk, local market conditions, a great asset class where your capital is locked. Now Vincere, you're fully liquid, withdrawn one business day, no lockups, no transaction costs on exit. Bonds and private credit, low volatility but low return. In a rising rate environment, bond values fall while you wait for yield. Private credit requires accredited investor status, multi-year lockups, and minimum commitments in the hundreds of thousands. Current yields in private credit are attractive, but the illiquidity premium is real. Now for Vincere, comparable or higher returns with complete liquidity and no entry minimums at the institutional level. Hedge funds, the premium option, 2% management fee plus 20% of profits. Multi-year redemption windows, minimum commitments that exclude most investors, and the majority of hedge funds, historically, fail to beat the S&P on a net of fees basis over a 10-year period. Now Vincere, zero management fees, zero performance fees. You keep 100% of what the algorithms produce, and our verified 6-year track record exceeds the risk-adjusted returns profile of most funds you could possibly access. The question isn't whether algorithmic trading is better than these alternatives. The question is why you haven't had access to it until now. Let me address the competitive landscape directly, because if you've looked into algorithmic trading before, you've probably run into other providers, and you may have had a bad experience. The retail algorithmic trading space breaks into several categories, and most of them have some pretty serious problems. Forex algorithm providers. These are by far the most common and the most problematic. Forex is largely unregulated, subject to broker manipulation, and characterized by structural disadvantages for retail participants. The majority rely on martingale or grid strategies, systems that compound position sizes after losses. They look extraordinary in a backtest, but they blow up accounts in real conditions. Most have no verifiable track record, many operate in jurisdiction with no regulatory oversight, and almost universally, they use the same single anonymous auditing firm with no credentials and no face behind it to verify their actual numbers. That alone should tell you everything. We don't trade Forex, we never will. So-called AI algorithms. This is the newest category and one of the most misleading. These are systems marketed as using artificial intelligence or machine learning to adapt in real time. The problem is that self-learning systems can and do drift. They can deteriorate rapidly when market conditions change because they're optimizing for patterns that no longer exist. There is no edge in a black box that nobody fully understands, including the people selling it. Our algorithms are rule-based, disciplined, consistent. They execute the same logic in month 1 as they do in month 70. That's not a limitation, that's the source of consistency. Single stock and single equity dependent algorithms. Many algorithm providers, particularly in the options and equity space, are entirely dependent on one sector, one stock, or one market condition continuing to behave a certain way. When that stock has an earnings miss, a regulatory event, or a simple trend change, the strategy collapses. Now we trade a multitude of different futures contracts, S&P 500, NASDAQ, Dow Jones, gold, oil, natural gas. We are diversified. We're not all in one basket. Something else to look out for is algorithms that are actually just traders. This is more common than most people realize. Many so-called algorithmic trading services are simply discretionary traders placing manual trades and broadcasting those trades to subscriber accounts with a slight delay. These systems carry every emotional flaw of human trading: fear, greed, revenge trading, hesitation. They have no edge beyond the individual trader's own discipline, which is inconsistent by nature. Our strategies are fully automated, no human discretion, no emotional input, the same rules executed identically every single session. Here's a Vincere standard by comparison. 11 algorithms, all proprietary, all in-house built, all trading US regulated futures. No martingale, no grid logic, no single asset dependency, no AI drift, no human discretion, no overnight exposure, no leverage. Every result independently verified by absolute performance verification to GIPS standards. Zero performance fees, traded by our own team and traded with real capital. That combination does not exist anywhere else in this space at the retail level. That's not a claim, that's a fact that you can verify for yourself. Let me walk you through exactly what working with Vincere looks like. You open a US regulated futures brokerage account. Your capital stays in your name at a regulated institution, FDIC and SIPC protected. We never touch any of your funds. We never have custodial access. You maintain full control at all times. You deploy our suite of 11 algorithms on that account through NinjaTrader, the industry standard professional trading platform. The algorithms run automatically. Entries, exits, risk management, all handled by the system. You don't need to watch charts. You don't need to make decisions. You don't need to be a trader. Now, here's where Vincere is different from every other algorithmic trading provider in this space, and I want you to pay attention to this part. This is not a set it and forget it subscription where you get a login and an FAQ page. When you work with Vincere, you get direct one-on-one access to real algorithmic trading experts, people who trade these same algorithms themselves, and in some cases generate more from the returns of these algorithms than from their own salary. That's not a coincidence, that's alignment. You're not calling a support line and waiting on hold. You're not chatting with an AI bot. You're not emailing a general inbox and hoping someone responds in a week. You have direct access to real people available for a video call who understand exactly what's running on your account and why. The same team that built these strategies, the same team that runs them with their own money. That's who you get access to. Automated investing with human help when you need it. That combination, systematic execution plus genuine human expertise on call, is something no other provider in this category offers at this level. Think of it like this. Most people who want to build a business don't build the tools from scratch. They use the best tools available and focus on execution. Vincere is the infrastructure. You bring the capital. The algorithms do the work. And our team is with you every step of the way. Our strategies trade U.S. futures, primarily the S&P 500, the NASDAQ, the Dow Jones, gold, natural gas, oil. These are the deepest, most liquid futures markets in the world. Your orders execute at institutional-grade pricing with minimal slippage. All 11 algorithms are diversified across different strategies, timeframes, and market conditions. Non-correlated with each other, non-correlated with the broader market, designed to produce consistent returns across bull markets, bear markets, and everything in between. And every position is closed before end of session. No overnight exposure, ever. Let's run the math, because this is where the picture really comes into focus. Our algorithms are optimized for accounts starting at 110,000. That's the sweet spot where all 11 algorithms can run simultaneously and the diversification is fully active. Now, at an average of 4.15% per month, non-compounded, withdrawing gains monthly, a $110,000 account produces approximately $4,500 per month in average returns. Over a year, that's $54,000 in cash income on a $110,000 base. That's a 49% annual return, withdrawn as income with your principal intact. Now run the compounding math. If instead of withdrawing, you reinvest those gains, you're adding the monthly return back into the base before the next month begins. Over 6 years, starting from that same 110,000 point, that compounding produced $1.9 million result we saw earlier. The S&P 500 over that same period on the same starting capital, well, approximately 232,000. You'd have slightly more than doubled your money. Vincere compounded would have multiplied it by over 17 times. For investors with larger capital, 500,000, 1 million, 2 million, the proportional math scales linearly. A 500,000 account at 4.15% per month is approximately 20,000 per month in average returns, non-compounded. Now, compare that risk-adjusted profile against the alternatives. To generate 20,000 per month from real estate, you need approximately 4 to 5 million in unencumbered property, with all the maintenance, tenant, interest rate, and liquidity risk that comes with it. To generate that same amount from bonds at the current yields, roughly $3 to $4 million in principal. To get it from a hedge fund, you'd be paying 20% of your gains off the top and potentially waiting years for a redemption window. Vincere does it on 500,000, with full liquidity, with zero fees, and with a verified track record to underpin the projection. That is the opportunity here. Let me tell you what Vincere is actually building toward, because this is bigger than a subscription service. The vision is to build the infrastructure that moves retail investors through a progression that has never been available to them before. Starting with their own cash accounts, building a verified track record, and eventually scaling into a full institutional algorithmic hedge fund, with our clients as the founding investors. We're building a pipeline, not just for your capital to grow, but for you to grow into the caliber of investor that most people in this space never can actually become. The people who start now build the longest track record, the deepest compounding base, and first priority as Vincere moves forward to institutional scale. There is no advantage to waiting. Every month without systematic algorithmic exposure is the month that the compounding clock isn't running. And at 4.15% average monthly, that cost adds up faster than most people realize. The people who build with us now will be the founding generation of what comes next. Let me answer the two questions I know you're thinking. First, if these algorithms are this good, why sell access to them at all? Why not just trade them quietly and keep all the returns? Well, it's a fair question. The honest answer is that we are trading them ourselves, and profitably. But capital efficiency has a ceiling at the single account level. Building Vincere into something larger, a fund, an institution, a platform that can change how retail investors operate, requires building a business, not just managing a portfolio. The growth of the platform accelerates the development of better strategies, better infrastructure, and ultimately a better product for every client who works with us. Second question, won't adding more traders dilute the edge? Well, these future markets, they are large. They trade hundreds of billions of dollars of volume every single day. The capital we collectively deploy is a rounding error in that context. Our strategies are not dependent on speed or size advantages. They're dependent on logic and consistency. Adding clients does not degrade performance. Now, let me answer some of the most common questions directly. How liquid is this? Can I withdraw my money whenever I want? Yes, your capital sits in your own brokerage account. You can stop the algorithms and initiate a withdrawal at any time. Futures accounts typically settle within 1 business day. There are no lockup periods, no redemption windows, and no minimum holding periods. Your money is absolutely yours. Now, what if I've never used automated trading platforms before? Well, you don't need to be a trader. Our onboarding process walks you through every step of account setup and algorithmic deployment. Once it's running, the system is fully automated. Our system is available for questions throughout. Most of our clients have no prior trading experience whatsoever, but they handle just fine. What percentage of my portfolio should I allocate here? Well, we can't directly give financial advice. That's your decision to make with your own advisors. But as a general framework, most sophisticated investors approach this the way institutions approach alternative assets. A meaningful allocation that adds a non-correlated return stream without representing the entirety of their net worth. The specific numbers depend on your capital base, risk tolerance, and existing portfolio composition. This is something we can discuss on a demo call. Now, can I invest through my 401k? Not directly. Our strategies run through individual taxable brokerage accounts or IRAs that support futures trading. We can talk through the options on a demo call. Does this use leverage? No. Our algorithms do not use leverage beyond the inherent structure of futures contracts. Position sizing is controlled by each algorithm's risk parameters. We do not amplify positions beyond what the strategy calls for. What if the algorithms stop working? Well, honestly, every algorithm strategy does have a performance window. We monitor all 11 algorithms continuously. If a strategy shows signs of degradation, so defined drawdown thresholds, performance consistency metrics, it's paused, reviewed, and either rebuilt or replaced. Our verified track record demonstrates the durability of the current suite, but ongoing refinement is always a permanent part of our process. Is this compounded? Yes. If you choose, you can configure your account to reinvest returns monthly, growing the base capital available to the algorithms. Or you can withdraw gains each month as income and keep the principal flat. That choice is entirely yours. What is my downside risk? Our worst single month in our verified track record was approximately -8% drawdown. That is the observed verified worst case, not a hypothetical. No guarantee can be made though about the future performance, but the risk management architecture, no leverage, no overnight exposure, defined maximum losses per strategy, diversified across 11 uncorrelated algorithms, well, that's designed to make sure that catastrophic drawdowns are structurally extremely unlikely. Do I need experience to run algorithms? No, the setup is guided, the execution is automated, the ongoing management is handled by the system. You need capital, a compatible brokerage account, and access to NinjaTrader. We handle everything else. Let me describe exactly who this is built for, because Vincere is not right for everyone, and I'd rather be honest about that upfront than waste anyone's time. The ideal Vincere client has the capital they want to work aggressively but intelligently. They are frustrated with the returns available in traditional investment vehicles relative to the risk and illiquidity those vehicles require. They understand that diversified, systematic approaches to wealth building are superior to concentrated discretionary bets. They are not looking to get rich overnight. They are looking for a sophisticated, compounding system that builds wealth consistently over a multi-year horizon. And they want to be part of something that's growing towards institutional scale. The ideal client thinks in years, not weeks. They want to understand what they're in and why. They ask good questions. They value transparency over salesmanship. And ultimately, they want to win. Not just keep up with inflation, not just match the S&P, but actually win. Vincere is Latin for exactly that reason. Vincere means to win. And if that sounds like you, keep watching. Here's what I want you to do next. Below this video, there's a link to book a demo call with our team. This is not a sales call, it's a 1-hour conversation where we walk you through the performance data in detail, answer any specific questions about your situation, and if it makes sense, we can outline exactly what onboarding looks like for your capital level. There's no pressure, there's no commitment required to take the call. And if after 60 minutes, we don't think it's the right fit, trust me, we'll tell you that ourselves. What we'll cover on this call: a full walkthrough of the algorithmic suite performance, discussion of capital allocation and account setup, answers to any questions you have that this briefing didn't cover, and if you're ready, the first steps to getting your account up and running. So the link is below. Book the demo that works for your schedule. We'll be happy to help with any questions that you have. One more thing before you go. We don't offer a performance guarantee, and honestly, nobody who is honest and sincere can guarantee any trading returns. What we offer instead is something more meaningful: a verified track record spanning years of real market conditions, total transparency on every month including the bad ones, independent third-party performance verification by absolute performance verification, audited to global investment performance standards by the CFA Institute, and a team that trades the same strategies with their own capital every single day. Our approach to clients is built entirely on integrity. We would rather lose a potential client by being honest than gain one by overpromising. The data speaks for itself. You don't have to take our word for any of it. Before I close, let me bring it all together. 11 proprietary algorithms, fully automated, verified trade data since January 2020, average monthly return of 4.15%, 81% of all months profitable, maximum single month drawdown of approximately -8%, compounded return over 1,600% on 110,000 starting balance, market neutral, positive performance in bull and bear conditions. No martingale, no grid, no leverage, no overnight exposure, no forex, no single stock risk, no AI drift, no emotional discretionary trading. Capital stays in your name in a US regulated brokerage account. Full liquidity, withdraw at any time, zero management fees, zero performance fees. You keep everything the algorithms produce. Every result independently verified by absolute performance verification to global investment performance standards. Direct one-on-one human support from the same team that trades these algorithms. Skin in the game at every level. There is no other product in this space that checks all of those boxes with a third-party verified track record. Vincere is Latin for to win. That's the standard we hold ourselves to. Every month, every algorithm, every client. If you've been sitting on capital that deserves better than what it's getting, if you're ready to access the kind of systematic, institutional grade, wealth building infrastructure that most retail investors will never have, the next step is simple. Book the demo. We'll see you on the other side.